Back with you. I'm just trying to go live on Facebook. Hope you're doing well today. Here we go. Gonna be doing an update on the market. Hi everybody, Sami Abu Saad here with another video today on the market. I'm gonna go ahead and get started. Before I do so, I want to let you know that trading is risky and that whatever we discuss today is for educational purposes only. Also, if you find benefit in today's video, be sure to please hit the like button, and beneath the video you'll also see some helpful links if you'd like to check them out later. But for now, let's go ahead and get started. Wanted to talk about the US market and what happened on Friday. We had an open house in the strategic day trader room. Wonderful, enjoyable experience, because sometimes open houses can be a little bit disruptive, but this was just an amazing open house, very successful. And we also happened to have probably the biggest red bar we've seen on the daily chart of the Qs and the SPY, especially the Qs, all year almost. And you know, thanks to President Trump, right? Actually, I was gonna show you something, but maybe I'll do it on the side here. President Trump sent off a tweet, right? And he tweeted the following: "Our country has lost stupidly trillions of dollars with China over many years. They have stolen our intellectual property at a rate of hundreds of billions of dollars a year. They want to continue. I won't let that happen. We don't need China, and frankly would be far better off without them. The vast amounts of money have made and stolen by China from the United States year after year for decades will and must stop. Our American companies are hereby ordered to immediately start looking for an alternative to China, including bringing your companies home and making your products in the USA. I'll be responding to China's tariffs this afternoon. This is a great opportunity for the United States. Also, I'm ordering all carriers, whatever." The point of this is to tell you that this, as I said in the room live on the mic on Friday, this is not a normal, threatening to impose tariffs. This is a declaration of war. This was, to me, President Trump saying, this is it. Okay? No solution going forward, right? That's what I felt this was, and I immediately, when it came out, I immediately said that, this is huge deal. We talked about the hourly chart. We said when the resistance above is larger than the support below, chances of a move lower are high, and that target was 181.50, right? Check it out, 181.56, crazy. So got right to target on the Qs, which is the bottom on the daily chart. But the point is, the most important thing for you to know is this was an extremely bearish bar, and I think it will have great consequences to the downside, unfortunately, because if you have a 401k, you don't obviously like a bearish market environment. But the truth is, I do like a bearish market environment because for trading, right? Day trading, swing trading, and even for playing earnings, because it makes things easier with volatility, right? When you have a downtrend, you have volatility always, because downtrends are controlled by fear, right? So with fear being easier to exploit than greed and volatility picking up, it makes for a wonderful trading environment. But long-term accounts, they will either suffer or you have to liquidate. So that's the issue. And with long-term accounts, I don't like to react to just one day. I like to react to larger trends. Now, if we wait for the monthly chart to break, then it'll be a very late exit, right? We do have a peekaboo high, a new high here, or a breakout failure on the monthly chart. So I do think we're gonna retest the rising 20 on the monthly chart, which is about maybe we get to 170. That's actually below the 20 MA on the monthly. And if we do get to 170 and break below it, then all out bearish. Okay, then all out bearish. Prior low would be the next stop. Since we have a 45-degree rising 20 that has not yet flattened out, okay, in order for the market or a stock to fall really hard, usually you gotta get the moving average has to flatten out, or if it doesn't, you could get the big drop and then you get the bounce. So if we're gonna have a recession, just mark my word, okay? Mark my word. The market will drop, maybe base, right? Or it could also drop, rally, and then drop again. But the 20 has to start pointing down, has to go sideways and down, right? It flattens out before it starts to point down. So this is not, if you're a really long-term trader, for example, one of the people that are watching the video right now, I know, you probably know I'm talking to you, has been in the market for 30 years without exiting their position. And he's up huge in his long-term accounts, in his 401k, and now it's an IRA account, right? Wonderful. If that's your goal, is long term, you're not react, then I would wait, personally, I'd wait for for the moving average to flatten out, and then either get a sell setup or a base breakdown, right, before reacting. Now, if you don't have that kind of time horizon, then you can obviously get out before. You don't have to wait for all of that to happen. But if you're a long-term trader, then I would wait a little bit longer. Now, with that said, I just want to kind of give you kind of a summary. This was bearish, and I do think we're going to have consequences. I am going to play 4 different ideas, swing short on Monday if they trigger, okay? The issue is, after a big red bar, usually it's not a good idea to start entering into shorts. I already got triggered into 3. I believe 3 different ideas on Friday. Short. They just triggered 3 different ideas. So I'm going to add more. But usually you want to wait for a reaction or a doji bar, and then below it you play short. Okay, that's how it's better, because a lot of things have already moved. Okay, so you need to already be in the position short, and if you're not, then wait for a reaction. Because what if on Monday we get a huge reaction, or we get a small red bar and then we get a huge big green bar after? We get a bottoming tail bar, basically, because it initially drops, let's say, and then it reverses and then ends up, then you got triggered into the shorts and then stopped out, right? I don't think there's a coming back after this, personally. I don't think. But I just think that in general, you gotta wait for a reaction and then a continuation. In this case, since I don't think there's a coming back, and you see these ideas, I have more. I have actually about 50 short ideas. No, not quite 50, maybe like 35, I would say, 35, but these are the favorites. And so I'm gonna go with 4 if they trigger on Monday, and then wait and see. But I don't think there is a coming back after this. Could be wrong, because we haven't yet broken under the base, right? Could be wrong, but I don't think there's a coming back. I felt this was a declaration of war by Trump, and that we're going to continue lower from here. Projection wise, like, where do we go? On the weekly chart, there's no support. There's very little support right here, right? Next support area is 170. So if we are to come down, I would disregard this as target. That's not going to stop the market. It's going to be 170. That's the next target area. And if we reach it, guess what? If we reach 170, do you think we're going to bounce off of it? No. It'll be just a small reaction, and then probably lower one more time. And if we do that, then unfortunately, I'm sorry to say, actually part of me loves it, because it'll be really good for as a trading environment. Then we'll enter into a recession. Okay? If we reach 170, we'll probably bounce or pause, but probably more likely we bounce. And if we break under it, which would be very likely by that time, because look at that moving average on the weekly, then the next target would be 150. But by that point, it'll be all out bearish. I would think it would be the beginning of a recession, personally. Now, I do these videos every week, so I'll keep you posted. But for now, what happened on Friday was extremely bearish. Let's see if we can get some kind of a reaction and then continuation on Tuesday. But I'm afraid we're not going to even get any kind of a reaction from the bulls. I'm afraid we're going to actually continue lower. This was a huge bar at support. So I hope we get some kind of a pause or reaction. It'll make things easier, because if we get a pause, right, if we get a doji bar right here, and then we know what to do. we break under this, then right, that's a continuation pattern. But if we don't get a reaction, it'll be more difficult. So I'm hoping for a pause, and then next drop will be probably the 200, 170, and then if we get to 170, for sure we'll probably bounce a bit or go sideways, but more likely bounce, and then lower to 140, which is last year's low. And if we break under this, then recession. Okay, check this out. Check this out. That's the IWM, guys. Remember we talked about it? Look at the monthly. Does that look good to you? The answer should be no, it doesn't. The IWM leads the market. It's the leading index because it's the IWM is basically the Russell 2000. It's the small caps. The small caps always, when the market bottoms, are the first to get bought, and when the market tops are the first to get sold. The IWM got sold in August, put in the top, rather than in October, like the rest of the U.S. equity, like the Qs, the SPY. Actually, it topped out in August, and now look where look how it looks on the monthly chart. Looks lower. So that's another indication that we are lower long term. Okay. We'll see if we can get a reaction also from the IWM, right? Let's hope we get a reaction. We didn't close under the pivot on a closing basis, right? We didn't. The bar closed at 145.43. The bar's low here is 144.79. So we didn't actually close below it, but we'll see what happens on Monday. So Monday is going to be really key to see if we get follow through or we get a pause. And if we get a pause, then Tuesday will be the most important day of the week next week. But if we don't get a pause and we get continuation, that will also be bearish. I prefer a pause, as I said 5 different times already, but we'll see. Again, the IWM leads the market, is the leading index, and it looks horrible. It looks really bad. See it? It looks really bad. I wish I can say, oh, I'm already out of my, I'm already all out cash in my 401k. I'm not. So pretty tricky, but that's what. Let's see. I'm gonna show you this. That's what our president can do. Your technical analysis is no match for my tweets. Yes, sir. Agreed. 100%. All right, everybody. Hope you enjoyed this update. To be continued, right? It's all going to depend on whether we get follow through on Monday or we get a pause and then follow through maybe on Tuesday or Wednesday. So to be continued, I'll see you on Monday in the room at 9 o'clock. And it's going to be a very, very interesting week next week. It's going to be really, really interesting. I hope you are doing well in your personal and professional and your trading life as well. And I'll talk to you again in the room on Monday. Or if you're not in my room, then I'll talk to you next week. If you're not in the room, take the chance to check it out. You can actually join me for the next 30 days. For just $49, okay? For just $49. If you're never been part of the room, link is in the description. Or if you're more into long-term trading or swing trading or earnings plays, then you want to check out the Strategic Swing Trader. Okay, that's the newsletter that goes out twice a day. One in the morning for the regular swings, and one in the afternoon. I send out an email in the afternoon for the earnings plays. Okay, so. Links again are in the description, and with that said, have a wonderful rest of the weekend, and I'll talk to you soon. Take care, everybody. Thanks for watching.